Hi everyone and welcome to my morning report analysis videos with me, Rich Market Analyst at Hantec Markets on Thursday 15th of November. Big and developing news surrounding Brexit. The deal that Theresa May seemingly got on the table is, well, I mean, it's got past the EU, but how does it get past domestically? And it's not really seemingly getting very far at the moment. The Cabinet did agree to it yesterday, but we've had a couple of resignations today, the key one being Dominic Raab, her Brexit secretary. I mean, surely that now is likely to induce further resignations. She's got to get it through Parliament. This arithmetic doesn't really add up there, and then it doesn't really sort of look particularly positive for Theresa May in that regard. Potential vote of no confidence also in the offing. Let me show you how sterling has reacted. 180 pips down now, 28.15. That is coming back to through support levels, and is now sort of on the way towards 27 as the next key level of support area there. It certainly looks as though that the dollar is also a little bit more corrective. Yesterday we had inflation data which disappointed. We had yields coming off. 10-year yield continues to fall away. Yield differentials have turned against the dollar in reaction to that, so certainly that has helped to drive a bit of a euro rally, and that continues today to an extent, but focus is clearly on how sterling is performing, and it's performing pretty badly. In terms of equity markets, we've got a mild outperformance of FTSE 100. That comes with the sterling weakness. That's pretty standard stuff there, although European markets are also fairly well supported. That's despite the fact that you've had Wall Street lower overnight. You have got a bit of a futures rebound today on Wall Street, so that's helping that move. You've got the Aussie dollar, which is outperforming as well. We've had Australian unemployment data better than expected today, so that is helping the Australian dollar to outperform. But as I said, sterling is the key focus today. So, in terms of data points, we're actually getting the UK retail sales out, and that's just come out. You may have just seen that actually. Let me just scroll down, and what we've got is retail sales UK coming in worse than expected across the board. That's obviously not going to help sterling at all. That could well have precipitated a bit further of a leg lower. But certainly the focus is on Brexit. In terms of other data points this afternoon, we've got US retail sales at 130, expected to come in at 0.5% positive on the month for the ex-autos retail sales. We've also got the Philly Fed and the Empire State manufacturing as well. Both of them expected to come at 20, which is a slight tick lower. So my chart today is the Kiwi dollar actually. Now what we have seen is the Kiwi dollar, which has been pretty strong in the last few weeks, and that has come despite the fact that the dollar has been fairly strong in that time. But now the dollar has started to correct back. We've seen the Kiwi dollar breaking out again and back above 68 figure today. That's a near-term breakout in itself. You got last week's high, and it now opens 68.50, which is the July high there, which is also a pivot as well. So a test of that pivot looks likely now. That higher low that we've got posted at 67 figure area, that is coming at the support of an old breakout. So you've got a really good band of support near term, 67 to 67.20. That looks like a positive level. Look at those momentum indicators. MACD lines accelerating higher. RSI supported at 60, pushing higher. Stochastics also strongly configured. This is pretty good stuff for a turnaround play in the Kiwi. Now through 68.50 would be a key breakout on a medium term basis. So that would be the level to watch on a medium term basis. That would open that 70.60 level. So we are still seeing this improvement in the Kiwi. You could even argue that that is a bull flag as well. You could probably measure that from the low and project that higher. So that would go well in towards sort of the 69 area, 69.50. So we are looking at a decent breakout on the Kiwi dollar today. But as I said, all eyes on sterling at the moment. But yeah, I wish you good luck in your trading today, and I will speak to you again later.